What is going on, SoFi fans? Welcome back to Financial Journey. So today I want to give you a good breakdown of what I feel might be coming for SoFi's way this week, where we might end up as well. So I'll give you my price prediction, go over some data points very relevant to a lot of investors. Before I get into any of that though, making sure you guys hit that thumbs up and subscribe, I greatly appreciate that. With that, let's get right to it. So as far as economic data for this upcoming week, the only thing that is going to cause some volatility within Lucid and the broader market is just CPI data. So that is coming out on Wednesday. Something to keep in mind is the forecast, majority of them are showing a significant drop. So again, that might show that there is a little bit more of a curbed CPI data, where inflation is curbed potentially in the short term. So it's one of those things that we just need to stay tuned and watch. If it is significantly below the forecast, do anticipate that SoFi and other growth stocks are going to go through a massive rally. On the contrary, if it does go a little bit higher, then that may show a little bit more fear, a little bit more recession. You're going to see a lot of that talk start to come back up. But outside of that though, 13Fs, so a lot of big players are going to be disclosing their positions into SoFi this upcoming week. So a lot of the big players, so that's something you really need to watch for. Not necessarily a big catalyst, because a lot of this information already has happened, so that's all technically from Q2. But a lot of retail investors really love to see, for instance here, State Board of Administration of Florida retirement system up 690%. So they definitely did load the boat. Then all the green rows right here are new positions. So clearly a lot more buyers were getting in from an institutional stance. So that's something that retail investors absolutely love. And like I've been saying, the second week of August is when a lot of big players in SoFi are going to disclose their positions, and those are technically right here. So you can see SoftBank, Vanguard, so BlackRock as well. So a lot of big names are in SoFi, and once they disclose their position, especially if they increase it, that can be seen as a very good catalyst to give SoFi a nice little bump up as well. But when it comes down to it though, there's a lot of positive things that SoFi is going to rally from, and some of which is just as plain and simple as this. So even Anthony Noto did retweet this. So it does look like SoFi was ranked the highest for overall robo-advisor this year, and I really find this very interesting, the fact that these are very good catalysts. And the reason is that they didn't technically even bring this up in the Q2 earnings. So this is all of the transcript from the Q2 earnings for SoFi. I found this very interesting of a earnings. But there was some things that I did find very interesting that technically a lot of people don't really aren't really talking about as much as they should be. So looking here, in addition, approximately 80% of all of our deposits from direct deposit members, demonstrating the quality and stickiness of the deposits. 80% of all of their deposits are done by direct deposit. That is absolutely huge and a massive catalyst that a lot of people are just overlooking, because that is a very, very big deal. Keep in mind, I'm not a financial advisor, so do your own due diligence at the end of the day. So those are some things that are going to be floating around this week, piggybacking, giving SoFi a nice little bump up, or possibly negative as well, depending on how you see the CPI data or how that might come out. In addition to that though, I just want to point out, number of ETFs holding SoFi has gone up considerably. Last time I even looked at it, it was roughly at 38, and that was give or take about 2 months ago. So a lot more ETFs are holding SoFi. So that's a very big deal if you ask me. But shorts have been one of those ones that's always really just been a pain in our back for SoFi. They've been really manipulating the market, and even Anthony has said that technically this is why the market is very irrational. It's acting very irrational. So looking at the short interest, there's currently $1.1 billion worth of shorts out there against SoFi. So imagine if there's a good piece of news or continued piece of news of, like I said, all of this information, we could potentially have a nice squeeze on our hands. So right now the short score is 72.59, utilization is 100%. On a side note as well, while I'm ranting of all of this information, if you guys have any questions about specific stuff, let me know in the comments below. I'll definitely address that, what utilization is, what cost to borrow, and why any of this is actually important at the end of the day. But based on Friday, they did close out 0.47%, 622,000 shares were returned. Cost to borrow, once again, you see that manipulation being negative. Cost to borrow average is 1.9%, so that's gone down quite a lot. So typically, cost to borrow and short interest is inverse. So the fact that short interest and also cost to borrow both went down is a very bullish sign. It shows that it's not advantageous for shorts to maintain their position. But still, at the end of the day, there still is $1.1 billion worth of shorts out there. So let me know your thoughts on all of that in the comments below. One thing as well, what I feel is very interesting and relevant for this week is the technicals. So on this, I do have the 50, 100, 200-day moving averages, Bollinger Bands, RSI, stochastic, and momentum. So momentum has gone down a little bit, showing number of retail investors kind of exited a little bit post Q2 earnings. Stochastic still shows a deviation, so black line above the red showing a nice bullish trend. RSI is currently at 68, and on the actual chart we're higher percentile of the Bollinger Band per se, which is a very positive catalyst. Technically 9 times out of 10 whenever we're outside of that, we do get pulled back in unless there's a justifiable cause for us to stay out there. So that's something we need to keep in mind. Everything is looking very beautiful on the actual technicals. Just want to give you a quick micro review. So as far as the resistance points, we got $8.21, $8.45, and $8.65. We did actually break past that first resistance point on Friday as well. First, second, and third support points very tight knit for the first and second ones, which is a very positive thing as well. So at the end of the day, I think right now we are setting ourselves up for the next leg up, which in reality is the $9 target. That's where I see things going, at least in the foreseeable future. So as far as my price prediction for the end of the week, I personally feel it is going to be between the $8.50 and $9 range. My own 2 cents, like I said, this is only for entertainment purposes, and in the end you make sure you do your own due diligence, because a lot of things could happen with SoFi. It's a very volatile stock, especially with manipulation behind the scenes. And one fun side note is, technically, I just want to show you this. This is all the analysts that were on board. So you see Piper Sandler, Mizuho, Oppenheimer, Credit Suisse, Jefferies, Morgan Stanley, and I am not going to Hansen. I'm not really familiar with them. But still, at the end of the day, of the 7 analysts that did all ask questions, only 2 of them have actually given us ratings. So that was Mizuho and I believe Credit Suisse. But at the end of the day, I find that a little bit more BS. Why did Morgan Stanley, why did nobody else give us ratings since then? Obviously, even Bank of America wasn't even a part of this as well, whereas typically they have been. So what is up with that? That might be, again, a little bit more signs of manipulation, which in reality they should be giving us buy ratings, justify